Hey traders, Jeff coming back to you from Full Throttle Traders. I want to take a minute today and just talk about a couple of plays that we did in this market. This is a very unusual time. Things will settle, they always do. It's always darkest before the dawn, but you still have to follow supply and demand, support, resistance, and whatnot. So I want to pick out two plays that we took just on the day trade side. We took our time, took us about 30 minutes to find that play, and we were in and out of that play probably in 5 to 7 minutes or so. Again, making certain that you're using multiple time frames as your catalyst, because you can get shaken out with the market. Things are setting up that are looking like patterns that aren't. So you got to identify good patterns, multiple time frames, but more importantly, identify relative strength and weakness. Take a look. Okay, so you can see Abbott Labs we took yesterday. Now, healthcare, obviously, XLV has been in the news all over the place with UNH, obviously Humana yesterday, a lot of just back and forth, a lot of whip action in these particular stocks in the market. But let's focus in on some of the drug makers. So XLV, yesterday we came through, and I'll show you one today. We had 2 days down into this area here on the daily charts. If you look at the bigger picture, you can see we had room. When we saw this trade, we were coming through the midpoint of the Bollinger Band. That always concerns me, but usually we'll push through, and if we're gonna pull back, we'll pull back later. For a scalp, doesn't really matter. We had plenty of room on this. The ADR was about $2.50, the average daily range. We had room down support line, maybe even demand line yesterday. Now, when I take changes to a 65-minute chart, you can see yesterday we were 4 bars or 5 bars down and then the gap, right? So that was a concern that we were down that far. But the thing that really made the difference on this was what we call relative weakness. The market was starting to make that move, right? Initially, and I was looking for stocks, particularly in a weak sector, that was not. We saw UNH get some travel, we saw Humana get some upside, but as I was going through some of the drug makers, Eli Lilly, Merck, Pfizer, and I found this ABT, this is Abbott Laboratories in the healthcare sector, obviously a medical device. So if you look back here, the most important thing when you're dealing with supply and demand is that we want to find an entry. So the issue was yesterday here in the short term. I'll kind of open this up a bit more so you can see. See right there, right here was an issue that we were 4 bars down in the 2-minute chart. If you look on the 5-minute chart, it's similar, right? We're down multiple bars on the 22nd on a 5-minute chart. So I told the traders in the room, so we're not going to do this here. We're going to have to what we call equalize the width or the consolidation to what the distance with the drop was. This is a very clear concept. And again, it will save you a lot of money if you can get this. When you see a drop in a short consolidation, understand that you are lessening the odds of a follow through without some sort of a initial breakdown that fails. So when you go through these areas here, notice the length of the stop, the width here was about the length of the drop, right? So we had plenty of chances to get in before that. Could you have maybe taken the sell stuff here? You could have, but this particular one I elected to come in underneath the low here at 73, actually 70 right here. We didn't do it here. We could have, and if we did, we would have got in at 70 and possibly stopped out on a tight stop on this, but it would have been close. So we waited, we came down, we took the 70 break here, and again, we had a 50-cent stop. We came right down here to 131.18, took 100% of the profits out of the trade. I don't care what happens beyond that point. I'm just trying to find when the market was bouncing in a weak sector and ALB was not, I was looking for a sideways consolidation that met the distance of the drop, and it was like a no-brainer for me. Get in with your shorting, your buying puts or selling the stock. That was a nice little 50-cent, 51-cent gain, in and out, no pain. I don't think it came against at all. That's what happens when you take your time and you find out what's long and what's short. If you also take a look here, the 65-minute chart and the daily, these time frames were matching up. The market was starting to make that early climb, but these were definitely not. So you have to factor in on those. Let me take a look at another one. Okay, so MU, if you look at MU here, we actually had the little sell set up here yesterday. That's a 65. Let me go to the daily chart here really quick to give you a better idea. Look how we were, for the first time in a long time, gapping down below or below the 8-period moving average, the white dotted line, below for the first time, really below the 50, and you had a crossover here of the 20-period moving average on the hourly chart. crossing over the 50 period SMA on that chart. So we have the gap down here in MU. Now the tech sector got sold off a little bit heavier this morning as a result of the Apple comments and things like that and the tariff situation. And actually Apple's even down a little bit further as the market kind of rallied here. So what we did is we waited for the precise entry on this as a short, because this was definitely falling. When the market started climbing, which is pretty much out of the box, a very choppy type of climb in the SPY here today, you can see just a choppy type of move, and that's the 2 minute. Here's a 5 minute, a little better picture. Choppy type of move up. It was very almost bearish in a lot of ways, but it was moving higher. So going through our normal scans that we do every day in our live trading room, we stumbled across MU. Now MU is obviously a tech sector, runs about $2.77 over the last 5 days, including pre-market, the average distance from top to bottom. So again, all these things were coming through. I was simply going down the S&P 500 list, scan, looking at volume, looking at pluses, looking at minuses. When the market was going up, I turned my scan into a negative. I want to see what's negative. Now a lot was negative, but a lot of these negatives were bouncing. And so I wanted to see. Now you can see here, I just made 50 bucks on the trade. I took the wrong share size in here and it got away from me. I had to stick with it. But the fact is, we just made, but the trade actually executed in full. So in this one here, because of these daily time frames, you had a complete void to the left, underneath the area, weak sector, and then the bounce happened in the market and the sector, and this one didn't, at least initially. So we went down to the 2 minute chart, we drilled down, and we could have taken, I don't like these roundabouts that take the low out, although that would have worked to some degree. I looked right here to see what was going to happen with the bounce. Will it stay weak? When the market started to tick up, would this stay weak? And it moved back up a little bit here, and it didn't take the low out. I would not have taken that as a breakdown and be a double bottom. So what we did is that we actually up in here, we went up in here and we sold short VWAP at 91.70 here, with the stop just over the open line, 92.20. So we had 50-cent stop, and look what happened. It sat here, VWAP did its thing, weak sector, the market kept going up. This did one more little retest to the bottom, so we had a 1 hour scalp in here. We got out at 20 cents, I think 20 cents. We could have, there's probably an hour and a half in there very quickly before it bounced in that area again. I didn't make any money on it. I had skin in the game, but it was just nominal risk because I chose the wrong share size. I was factoring half, and anyway, just a big mistake on the calculator here, and it was already gone away once it started going here. So anyway, so that's the deal. Again, the key on this is making sure that your daily and your 60 match. And then if they match, you want to see the market move. And then the most important thing is make sure the stock does not move. It can track up, they all do, but you want to track up bearishly, a bearish consolidation. You don't want to see a bullish tracking go up with the market in here. So this was not even tracking at that point in time. I would have been okay with it coming out of range, but not to that extent. So anyway, join us at Full Throttle Traders, get a free trial. Come to our live trading room. We do this every day. We probably comment and talk about these trades for the first hour of the morning here. Constant education as we're moving into the day trading side, and we move into the options. We also had some credit spreads. Took the, I won't talk about all the trades in here. Took the May 23rd 0DT 527. Where did we take it at? Once it pulled back off V bottom and started clearing the high, that was probably the bottom. And then we took a spread here. I don't think it ever showed any red. Again, just took a few contracts in here. Anyway, just piecing together, $200 to $400, and that's all I'm doing in this market until we settle out of this kind of weirdness. Just happy to take those small profits until we kind of get out of the mess here. You guys have a great holiday weekend. See you Tuesday.